This week on Sylvia's Traders Lounge.
The human brain is actually pretty good at understanding price action. There's an actual study that shows like people who know nothing about price action, if they watch the prices move, can be decent at predicting what the prices are going to do.
Sylvia's Traders Lounge welcomes you all to yet another webinar where we learn, trade, and profit. We shall be giving you trading insights on technical analysis, fundamental analysis, risk management, and trading psychology. We're truly honored to have Denise on our trading podcast, and I'm going to read out her trading bio, or rather her career trading bio. Denise Shull is a strategy and performance advisor. She is also the founder and CEO of the Rethink Group. In 1994, Denise Shull was finishing her master's degree in neuropsychoanalysis at the University of Chicago when a floor trader friend of hers from the Chicago Board of Options persuaded her to learn about short-term equities trading at one of the first electronic trading firms. And then before she knew it, she had moved to Schonfeld Securities to learn momentum trading. And then she moved further to run an equities desk in New York. Her planned PhD turned into classes at a boutique psychoanalytic institute. In 2003, they asked her to publish her master's thesis. In the update, she discovered that neuroscience was demonstrating how emotion is required for human decision-making. Realizing how this finding changed conventional investing and trading psychology, Denise began writing and speaking about how neuroeconomics was revolutionizing our understanding of human perception and judgment. Almost 20 years later, she has traveled all around the globe. She's taught how confidence, conviction, intuition, instinct, and even fear work together to inform the best risk decisions and to support the most productive teams. Her 2012 book called Market Mind Games has been called the Rosetta Stone of trading psychology, and her next book will tentatively be out in 2024, called Just Mind Games. Welcome, Denise, to our podcast.
Thank you for having me.
Yes, and maybe now you can tell us, because it will be like an open-ended discussion. You can tell us, what does it take for a trader to be psychologically prepared to be able to perform at a high performance level, what you'd call like an elite level performance?
I think there's two categories. There's like, what is trading, and what is the game of it? And most people don't get that quite right. And then there's like how the brain sees the process of trading. And most people don't get that quite right either. So like essentially, the game is about playing other people. Like poker, where yeah, it's good if you have aces, but what it matters is how you bet your hand vis-a-vis how other people bet their hands. That's what wins in poker. Like, it's not just the cards you have. You can have the best cards and lose to someone who knows how to play the people. So trading is about playing the people. Like, there's actual brain research that shows the more you're using your people prediction skills, the better you trade. But it's also like you need a method, you need some overlay, you need some lens, it's like some glasses to see it through, right? To make it make sense. Well, the clue is for those glasses to make sense to you, first of all, and for you to really believe them. I mean, there's a bazillion ways to trade this market. I mean, I have professional hedge fund managers who are managing, more than $1 billion. And they all have different ways. Some of them will like look at, they're trading stocks and they'll look at the fundamentals of a company, but they'll make their decision. John says he hasn't gotten the email to log in. I'm going to tell him, look in your junk. Because it's probably automatic, right?
Yeah, he should be able to log in just by clicking on the link. Register.
Yeah. You know, and then like I have another portfolio manager, what's called long short equity, you know, meaning they're going long stocks and selling stocks short. And in that particular case, they're supposed to have no market exposure, you know, like it doesn't matter if the market goes up or down. But with earnings coming out, he was like, okay, now it's earnings season. And now the only thing that's going to matter in the market is fundamentals, and fundamentals are going to drive the price. And I, of course, I'm coaching him, right? But I'm thinking that's never the case. Like, it's never the case, because there's so many other people who trade through different lenses, right? Like they see it differently. They only see the prices on a chart. They couldn't care less about the fundamentals. But, you know, he's trading successfully, and my clients who are using charts are trading successfully, and my clients who are trading global macro, you know, interest rates and current relative currency strength, you know. So the clue, and I didn't understand this at the beginning, was there are, you know, a gazillion ways to do it. And the trick is to like have one that makes sense to you. You know, that you have this chaotic game that has millions of players doing it different ways. And you need some lens, but you have to believe in the lens. So like one thing that happens to traders a lot is they have a lens and they try to trade it, but they don't completely believe it. Like their level of confidence or conviction in how they're interacting is wavering, let's say. And then they take the standard trading psychology and say, oh, I'm supposed to take the emotion out of it. So you just try to use your intellect to override that feeling of like worry or concern or uncertainty. And then it's too emotionally agitating. So then people say, well, control the emotion. But actually, that doesn't really work. Like neuroscience has known for more than 20 years that you cannot make a decision without emotion. So every single decision has emotion in it. It just, you don't realize like that confidence is an emotion, or the hedge fund word is conviction. You don't realize conviction, that you really believe something, is an emotion. So you're a little nervous about like, do you really believe in your lens? You're trying to push the nervousness aside because you're supposed to take it out of the decision and just trade whatever your system is. But your brain is relying on that nervousness. Like that nervousness is trying to get your attention. So when you try to shove it aside, it like gets louder actually. And then you eventually act on it. You know, you get out of the trade early, or, you know, you don't get as big in the trade, or, you know, you somehow act on the worry. And then you're like, damn, I didn't follow my plan. You know, I'm supposed to plan the trade the plan. I didn't follow my plan. I let my emotions get to me. Well, that's actually not what happened. It just looks like what happened. Like what really happened is you didn't have the right emotions to begin with, i.e., you weren't as confident in your lens, or you had doubts about your lens, and you didn't even know it. You didn't know you had doubts about your lens. And then when your subconscious is trying to tell you you have doubts because it wants you to resolve the doubts so that you can then be more clear intellectually, you try to shut that message down. So it just gets louder, and you get more nervous, and you jump out of the trade or don't take the trade.
All right. Sounds exciting. And maybe you can tell us, because we're humans and we're emotional beings, and traders usually say that if you want to like be successful at trading, you have to eliminate emotion. So is it a game of completely eliminating the emotions, or do you have to work with your emotions and, you know, at the same time?
Well, you will ultimately be more successful if you think of your emotions as information. And then you try to learn how to know like what kind of information they're giving you. And the broad category is, are you getting a feeling that's about the market, or are you having a feeling that's about you? You know, and like, am I going to make or lose money is really about you, right? Like the focus of that emotion is yourself. Like, is this going to turn out well or badly? It's focused on you. It's not like this sense of, you know, what the buying or selling pressure in the market is. Now you'll get a feeling about the buying or selling pressure in the market. And the easiest way to recognize that feeling is to recognize the other feelings. So you're thinking of all of them, and feelings and emotions, I just think of them as degrees of intensity. You know, there's some signal your body gives you, right? Like, and so I use it kind of interchangeably. But if you think of all of those bodily sensations, all of those bodily signals is information, and then your job, like the path you want to take to get better, is to be able to analyze the information and know which feelings you're having are about the market and which ones are about you. And the truth of that is, you know, most of them are about us, like, right? Like we're worried about. But the more that we can identify and connect like what we're thinking to a description of what we're feeling is like, okay, I'm really worried that, you know, I'm going to have a losing day or whatever. Like that allows us to kind of hold that feeling like right here and go, okay, well, yeah, I am, but that doesn't tell me anything about the market.
Mm-hmm.
Like, and then you can like hear your sense of the market better when you can just kind of hold that feeling about yourself.
All right. So then how do you distinguish between your emotions towards the market and the ones that are towards you? And as you analyze that information which the emotions are communicating to you, like what's the balance like?
Well, it's first very personal. And then I'm going to let John jump in on this too. Like different people have different balances. I will say this, whatever the ones about ourselves are, there's a pattern to them. You know, like we tend to have the same kinds of feelings that are they sound the same on the surface, but they're more like a fingerprint, you know, which if you really dig into them, they're about you and like, you know, how smart you think you are, like how safe you think you are. I mean, there's another layer to this about predicting, but we can come back to that. So I say, this is where you use your intellect. This is where you use the cognition, like to change your opinion of those feelings and then have a strategy for analyzing, realizing you're even having the feeling, you know, and then a strategy for analyzing it, understanding it. And you can put it into these two broad categories of intuition, you know, which is some information about the market, or impulse, which is some urgency to do something that seems like will keep you safe, you know, like you'll lose less money or, you know, you won't risk money. And so if you start to, you know, it's like a whole new data set, right? And you need like an outline. So the beginning of the outline is change your opinion, like understand that your emotions have information and that's how your brain is using them. So you might as well work with your brain as opposed to against it, because you're not going to really win against it ultimately. And that goes true even for people managing billions of dollars. You know, they may be able to achieve some level of success, but they have some like Achilles heel mistake that they make that prevents them from, you know, like reaching the next level of performance because they're not doing this. But anyway, then you understand, like, okay, is this feeling information about the market or is it about me? Is it information or is it intuition or impulse? Like, and you just start to work with yourself to get like a dictionary on yourself of how it feels when it's really about the market and less about you. Then you have to then practice. Like, I think it's kind of like learning a sport because it really is using your mind to think about your body, just like if you're, you know, trying to whatever, learn to play volleyball or something. John, you have a comment about this?
It's nice.
Sure.
Welcome to the podcast.
Thanks. Good to see you again. Thanks for having us back, the Rethink Group, Denise. Thank you for inviting me, Denise. And so, yeah, so quickly about that is that recently I've been kind of focusing on this idea of understanding what we're trying to do, what our confluence of things in the market that allow us to trade, helps us understand what we're trying to do, but it also helps us understand what we're not trying to do. And so when we become clear about that, it seems that it gives a better opportunity for the intuitive market type feelings to come out, because we're less fighting ourselves and more focusing on the market. Again, it's like Denise said, it's using your intellect. This is kind of the level one, using your intellect to get you to a spot where you set yourself up for that intuitive voice to come out. And then two, a couple things. One is the intensity of the feeling. That feeling that we get when we do the same thing over and over again. Denise kind of said the Achilles heel. It seems to me we all have one or more. I've worked through a lot of those types of moments where we feel that we have no power. For me, for whatever reason, a while there, I thought I could old school Paul Tudor Jones trade crude oil. That was wrong. And it was an impulsive type of moment where I kept going back and forth and I'd get all spun up. And the intensity of the moment was there. And when things are really intense and we can't, quote unquote, stop ourselves, it usually harkens back to something in the past. And the more we can understand that Achilles heel moment, the more we could start to unwrap it. And to me, it's this taking something from the past and imposing it on the present moment. The more we can understand that, the more we can separate them and see the present moment as it is. So that's.
Which ends up being the feeling about the market.
Yeah.
Because what he's saying is, the things that come from the past are almost always about us. Like, are we going to, are we going to be successful? Are we going to look smart? Are we going to, all these things. And we all have these sort of variations. When I first started trading, I was like a girl who like crossed the T's and dot the I's and shows up on time and turned my homework in, like I was like responsible, right? So I and like that was, I felt like it was the right thing to do. And, people would value me and appreciate me because like, I crossed the T's and dotted the I's, showed up on time, turned my homework in. So I start learning to trade and I hear this thing about, plan the trade the plan, have your stop loss. And I would always take my stop losses. Like always, like it was not an issue that I would never, because I was like being the good girl, because that's how I decided thought it was the right way to, execute life, if you will. And then one day, the owner of the firm, this was that first firm, Electronic Trading Group, called me up. I was in Chicago and he was in New York, and he's like, buy 5,000. Well, first Kmart was down on the day, and like I would never buy a stock that was down, like try to, like what? And he's like, buy 5,000 shares of Kmart. And I was like, I don't have the money in my account. He's like, I own the firm. I said, I don't have the money in my account. He said, I own the firm, just buy the damn 5,000 shares of Kmart. So I did. And then he goes, buy 5,000 more. And I'm like, are you out of your mind? Because it was like breaking all the rules. I didn't have the money in the account. Like I wasn't supposed to buy a stock that was down in the day, like whatever. He was trying to get me to see that I didn't always have to like cross every T and dot and follow everything perfectly, that it was about going with. Now, it turns out that trade didn't work. He was wrong. But I kind of got the message. I was taking my personal like strategy for life and applying it in spades. In the beginning, I talked about the game, and you got to understand the game. And, sometimes the game is like waves, right? Like it's waves in the ocean and you're on a surfboard and like all of a sudden it's a little bit different and you need to, I'm not really a surfer. I would like to be a surfer. There is a going with the flow of it, that is using, like he was using his market expertise to, in any event, I'll stop now and let you ask a question Yes.
All right, all right. And then now because you've worked with many institutional traders as well as people who've managed funds, for example, like what differences do you cite in people? And then like, are you in the job of fixing people in like intellectually or the psychological way of thinking? Or are you in the business of guiding them through their emotional intelligence? Or like what is it that you actually do to help people become better traders or better versions of themselves?
So first, I'm going to tell you that billion-dollar portfolio managers are effectively no different than you and me. Like the difference usually lies in how they got into investing and trading. So many of my clients, this is just a fact, they went to college and they majored in economics. And some of them got master's degrees in economics or maybe, an MBA. And out of that, they got some junior job at some investment firm, where at first they had to like make copies and get to coffee. But then they were taught, like they were given jobs of like this piece of analysis, create this spreadsheet that tells me this or that, right? And so they ended up being mentored by people who were already investing and trading. And those people who were investing and trading had a lens of how you interpret the market. And so then those people that got that degree, and got that job, then like learned this lens. So like one client I always think of who was at Goldman Sachs. Like if you get a job at Goldman Sachs and somebody at Goldman Sachs teaches you how to trade, you believe them. So I'm going to go back to like the very first point that I made, like your belief in you believe them because they're a trader at Goldman Sachs, right? So then you go a lot, like my client who believes that, the only thing that matters is fundamentals and now the market's going to trade completely on fundamentals because it's earnings season, US stock market. Like someone taught him that and he believes it and he's seen people make money. So he doesn't doubt his method, really, because of the way he learned it. But day to day, there's not that much difference between these people managing billions of dollars and the average trader who's trying to trade. They're real psychologically, mentally, they have self-doubt. They don't listen to their intuition. They don't follow their plan. Like they know enough to be profitable enough to keep the job in most cases, not in all cases, but they don't know how to use their senses, feelings, and emotions properly either. So there's not really that much difference is first. And then I know you asked me like how I help them. I basically help them work that outline of what feelings are information about the market and what feelings are information about themselves. Mm-hmm. And like we talked through their feelings and we sort out like what they really believe. Like yesterday I was on the phone. In that case, the guy has an undergraduate degree in math and I can't remember what his master's degree is, but it's the same thing. He got a junior job somewhere. He wasn't even, I don't even think planning on being in the markets. And he has an equities trade on and a bond trade on. And he was going through like the things the Fed are saying and interest rates. And he's like, really, these are the same trade. And I really believe in the equities trade more. So I should just ditch the bond trade. Like, and it's the talking through his feelings that he decides what he really believes. He may or may not be right. But what I know is when people make the decision out of what they really believe, what they really think, first of all, it works out more often than not. Second of all, even if it doesn't, they're less upset about it. Like it doesn't have the same, they like the other guy, the fundamentals guy, he was like, well, I'm going to trade the fundamentals through earnings. And if it doesn't work, I did the best I could and I can't feel bad about that. So like he's kind of setting himself up to be more psychologically safe, to be less upset if it doesn't work, because he's going to stick with what he thinks. But if you learn trading from someone not at a firm, and this applies even to me, like, you're like, is this really the right way? Because there's a billion other ways out there, right? You could go choose.
Yeah.
And that's why I started with, how much do you believe your lens?
So we have a question. How does one separate intuitive feelings from inner feelings?
I couldn't hear you that well. I think you said intuitive feelings from impulsive feelings. So, and John, I want you to help me with this, but generally, intuitive feelings are pretty calm. It's just like this sense of, Now, we don't listen to them. We don't have enough confidence in ourselves. We don't think we can or should believe that feeling. But you can't, like, if you have any, you gain education and experience, the human brain is actually pretty good at understanding price action. There's an actual study that shows, like, people who know nothing about price action, if they watch the prices move, can be decent at predicting what the prices are going to do. Why? Because it really is, you're really watching human beings, and we're all good at, like, watching other human beings, but we don't know, so anyway, that intuition is just calm. It's just like an impulse, like, wants you to do something. It's got, it is a skill and it takes time, but broadly speaking, it's calm versus energized. John, you want to comment?
Sure. So the impulsive feeling is very petulant. It's nagging. It makes us feel like we have to do something now. It's that idea that, this trade's going to be gone. It's going to be gone. You got to do it now, or else it's going to be gone. And then we're leaving. The intuitive feeling is kind of like a breeze. It kind of comes, it whispers something, but it's fine. You don't want to listen? Fine, I'll go away. And it's this idea of really starting to pay attention, cultivate the listening ear for intuitive ideas. And that happens in everyday life. Like, one of the examples is, you have a feeling that the car is going to cut you off, and it does. Okay, great. That's an intuitive feel that worked out. All right, good. I just felt it. And as we that ear starts to tune to the intuitive, for a brief moment, they're very similar volume wise. And so there's a transition period of really then starting to say, okay, the intuitive feeling also has a bodily sensation that's calm and breezy. And the impulsive one also has a bodily sensation where, it's the one I love. It's like the adrenaline, like the heart pumping, like I love that feeling. And so for me, it was really hard. And it took me talking to Denise, and that's why we have coaches, in saying, on the train, I thought about buying the British pound, but I watch the British pound every day, but I don't really do anything. And then Denise, the next call, would say, hey, what happened to the British pound? Oh, well, it was up 100 points. And she said, maybe there's something there. And the other thing, as we start to trust the intuitive feel, and even I pretty much only trade intuitively now, it feels like guessing so much, and I hate it so much, but it really is more attuned with the market and my feelings. So as I start to, it happened last week, the Friday after whatever that big day when it went straight down, I got stopped out of something. And I was in a class, and I turned my video off, and I went and I rebought that thing I just got stopped out of. And then I sat down and I'm like, wait, was that impulsive? Okay, what did that feel like? It was aggressive action, but no, it was very calm. And there's a conflict there, but I felt my body. I said, no, that's the right thing to do. So that was kind of a long-winded, maybe a little bit too in-depth way to talk about it, but that's the general way I feel.
You're going to have both feelings.
Yes.
And also, a thing that you can do is say, what do I want to happen? Because what you want to happen is more likely to be the impulsive thing.
Mm-hmm.
So if you're aware, like, well, I want whatever. Like, I don't trade that much anymore, but I trade a little bit, and I actually trade with my husband, and he's like an options guy, you know, and freaking whatever, butterfly, put call spread, and where I'm just like, buy the damn puts, please. But in any event, we've had a short trade on since S&P's 4150. Now, that was when we shorted it at the beginning. I can't remember what my point was going to be here. Oh, I know. So like lately, you know, as we've been off the bottom, like I have to say, okay, like I want it to keep going down. That doesn't mean it is still going down. But no, like when I'm able to say to myself, oh, I want it to, like, I don't care about the rest of our portfolio. I just want this trade to work. Like, I'm like, whatever, the rest of our portfolio is what it is. Like the market will do what it's going to, but like this trade, I want it to work. I don't know why, because I want to be right on it, because it's been so intuitive and like literally, and maybe because he's put it on in his put call spread way, but like to me, we're just short, like whatever. But when I realized I just wanted to work, like I had to say, you know, the other day, one of these last 2 or 3 days, I said, I might have been wrong in holding it still, like, and I don't think I would have been able to say that if I didn't ask myself, what do I want to happen as like a risk management thing, you know, that helps you know the feelings. Like, why do I wanted to work because I want to be smart. Like, okay, yeah, probably should have covered last week.
Okay, before my colleague Kish asks us some questions from the audience, maybe you can tell us, Denise, do your childhood experiences in any way affect your performance as a trader?
Yes, they do. So, you know, I figured this out a long time ago. Really, when one of my first clients who always lost money in the morning and then made it back in the afternoon, and we really couldn't figure it out. I was really brand new to coaching, but I just pulled in my psychoanalysis background, and I'm like, "What's your life story?" And he had been really poor as a child, and then had like done better in school through sports. And I realized he was repeating his life story every day in trading. And then I started to look for it, and like it would like I have a portfolio manager that works for a big fund, Wellington. And he was always grew up on a farm, and like his grandfather always criticized every little thing he did. You know, he stacked the wood wrong, mowed the grass wrong, like dug the ditch wrong. So he's always second guessing himself because he can't possibly have done it right, because he didn't do anything right, like until he was 13 and got a job at a garden center. But now, in the last 5 to 10 years, the brain science has shown that we're always predicting like what's going to happen. And we're always predicting what's going to happen based on our past experience. And the most important past experience to the feelings about ourselves is like our self-image. You know, how, like mine needing to cross the T's and dot the I's, so therefore having to get out of the stop loss. Like, or I mean, having to take every stop loss, but like being too afraid to let any trade run because I might make a mistake. So we have these personal experiences of like what happens to us in the world that inform like our self-image of like what we can expect to get and how we should go about getting it. And trading is, the markets are just like, you know, like the Rorschach blot, where we can just project anything onto that ink blot or anything onto the clouds, right? Like, and see what we want to see, because the prices will. So yes, that's a very long-winded way of saying yes. But some examples.
Okay.
Okay, so we really apply the power of learning and how to learn into it and how it ends up affecting trading.
I cannot hear you. I can hear you, but the words are like merged together.
Oh.
That maybe you could type it, or Sylvia, can you understand what Keisha's saying?
So she's asking, she's typed that if you could please explain about the power of anger and how how traders jump into it and how it ends up affecting their trading, like anger management, sort of. Yeah.
John knows what I'm thinking, like, wow, where do I start? So generally, right, we're taught that anger is bad and we're not supposed to have it, and we're not, we're supposed to, like, it's going to hurt us and all that. That's probably not actually true in reality. Like, all feelings in their pure form are trying to help us. So like anger is like a feeling of something's going wrong. Like something's happening to us that shouldn't be happening. And then we feel, maybe we feel annoyed at first and then frustrated more, and then angry. Well, in its pure form, that feeling is like, hey, John, like there's something wrong that you should turn your attention to make right. That's the real way anger works. But for almost all of us, it's distorted because we're told how bad it is. And like, if we act it out, particularly if we act it out as a kid, like we get in trouble, like it's bad, you shouldn't be angry, don't be an angry person, blah, 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 blah. Well, so none of us know how to understand it or deal with it. So what we often do is turn it on ourselves, like criticize ourselves more, are harder on ourselves. And then if you're being really hard on yourself and really self-critical, it's hard to execute on whatever you know about the market. Because basically, like, you have, what you know about the market, you as an adult, and those feelings. And then you have this, person standing next to you, like, in your head, like, smacking you, saying you're doing it wrong, or like, and you have both those things going on. And you're not happy about the person standing there yelling at you, telling you, that's in your own head. But if you can start to sort that out, like, okay, that, like my client, whose grandfather always criticized him, I can't get him to stop second guessing himself. And the reason I can't is because he cannot get even a little mad at his grandfather, because he's my grandfather and I love him and he meant well and he was trying to, all these things. So he just keeps repeating. If I could get him to stop feeling guilty about possibly being mad at his grandfather, then he could stop second guessing himself as much, because he's got both voices.
Mm-hmm.
But he's afraid. Most of us are afraid of our own anger because we've been taught to be afraid of it. Mm-hmm. When in its pure form, it's trying to help you. I don't know, John, if you have anything in particular to add to that.
Again, just for me, I loved anger, especially on the trading floor. It was so acceptable to be angry and scream and yell, and it was just glorious. And so, having the anger is like Denise said, having all of our emotions and feelings is important because they're information. Now, for me, what I needed to do, or what I've done, is say, all right, why do I go from point A to angry, rageful? There's a lot of steps in between, but for some reason I go here. And so for me, it was the idea of looking into, why do I go all the way to the rage? And as I was able to parse that out, it became clear to me that anger is just anger. And sometimes you should be angry. Like, it's a motivating force. Being angry that you made the same mistake 15 times is probably good. And you should probably look at it and say, all right, why is that? And like Denise said, there's an inner voice that is part of that process, but really talking it out, I think, is important.
And earlier on, when we were starting the session, Denise, you said that, trading is more like a game where, you're trying to see, like, because the market is made up of people's thoughts and actions and all that. So like, Paul is asking, in this trading game, because someone already has their own trading plan, and that is also based on your intuition from what we're gathering. So he's asking, is intuition more of following your trading plan, or is it more of feeling your feelings and replicating that to the market?
Yeah, so your trading plan needs to feel intuitively correct to you. Like it needs to resonate, and what resonates with me, for example, picking a spot and just going long or short because I learned to trade momentum, does not resonate with my econometrically trained husband who likes like everything, so he needs to put call spread to hedge his risk. And I'm like, just complicating the damn matter. Like it's either going up or down, but that's the only thing that makes sense to him. And the only thing that makes sense to me is straight up momentum, go long or short and take the risk. So that's what I mean by intuitively resonate. What's the lens that you see that game through, that you feel comfortable in navigating that game? I'm just going to give you a quick example. I don't know, American baseball, which is a sport John knows a lot about, but my hometown team, the Cleveland Guardians, was just playing the New York Yankees. And they won this game, I don't know, Saturday night or Sunday night. And the announcers talked about how Cleveland played very, like one step at a time, one small fundamental step at a time, against New York, that they played what they call Powerball because they kept hitting home runs, and I don't know how familiar you are with baseball, but those are two totally different ways to play the game. One step at a time, put a runner on base, get the runner from first to second, versus like just slam home runs. And, they're both valid. I mean, New York ended up winning the series, but they're both valid. Like my husband's way is valid, my way is valid, but it has to intuitively speak to you. So then you have this plan, but your brain is going to recognize that it's uncertain and ambiguous. Like really, at any moment, you can make an argument that it's going to go one of two ways. Really.
Yeah.
Like it's never clear. It helps your plan is just a way to help you, a strategy to get through that. So yeah, you have to believe in your strategy, which is a feeling. You should execute on that strategy, but there are going to be moments where your plan says one thing and your intuition says another. Your intuition, your true unconscious pattern recognition. In those moments, you should listen to your intuition.
All right. And we have one of our members, Carol is saying that she's guilty of using avoidance, that when she's stressed out, she doesn't even want to check how her trades are performing. How do you help such a trader?
So, like the question you should all take away is, what am I feeling and why am I feeling it? So, okay, you're stressed. Okay, what does that mean? Like, I'm going to guess. Okay, Carol, I'm just going to guess. Okay, I'm worried that like this is going to go wrong. I'm worried I'm going to lose money on this. And well, like why? Well, whatever. The price action's not working. Well, okay, what does that even mean? Like, if I lose money, what does it mean? Well, when you ask that question, like the question about the feeling, you're going to find you have some prediction that's about you. Like the prediction is going to be, well, I'm going to have had a losing week or a losing day, and I'm going to feel stupid, or my husband's going to be mad at me because I lost money today. There's going to be some prediction of what's going to happen in the future that's going to be unpleasant, that's going to be about you. So then if you can recognize that and hold that, because that prediction about the things going to happen to you in the future is it doesn't have anything to do with what the price is actually doing, right? So then you can know that you're having this prediction about your future, discomfort, and you can just hold that and have a better chance of listening to your true pattern recognition.
All right. And then I'm going to ask this question based on the TV series Billions, where Wendy Rhodes actually acted, or rather showed what you normally do when she's trying to help traders. So like, for example, if I come to you and I have been having a losing streak, and my boss has looked at my weekly performance and he says something is off with my trading, for example, and then I come to you, what would be your first question in regards to my losing streak and getting back to my performance? Because it's not like I wasn't doing well, it's just that something has prompted the losing streak and I need that figured out. So do you start from a point of, Sylvia, what would you be experiencing in this week that is slightly different? Or is it that I should analyze my trades, or is it that I should get in touch more with my feelings? Like, where do you start?
At the beginning.
Mm-hmm.
So I would literally say, when did this losing streak start? What was the first trade in the losing streak? What happened? How did it happen? What are your feelings about it? And then you go back, if you resolve that and you understand what really happened there, and you deal more effectively with the feelings about that, the losing streak will end. Nothing that happened after it started matters. There's some trade at the beginning, most likely you were mad at yourself for taking, or, or you were profitable and you gave up all the profit and let it go to a loser. There's something that happened at the beginning that you're mad at yourself, guilty, ashamed, some set of complicated emotions about yourself that you haven't worked through. And so then you're just trading off of those. And when you go back, the example I always give, and John and I are gonna have to go in a minute because we have another meeting, but it's like I had a trader whose wife had been kidnapped, and he'd gone 10 years. Like, he'd been really, really successful at hedge funds, and then he bounced from hedge fund to bank to hedge fund to bank. And because he'd been so successful, he was able to go 2 or 3 years. But he called me up and was like, I've tried everything and I've worked with every coach on the planet. And he also thought he'd worked through his wife being kidnapped. But at the end of the day, and it was for her father's money and she was fine, and although they did get a divorce, but he just felt guilty that he didn't protect her, and he was inadequate, and he'd never worked through that. And all we did was go back to the beginning and talk about his feelings, when the losing streak started, sorting out what are always going to be negative feelings, right? Guilt, shame, embarrassment, whatever. And understanding how the original trade happened in a way that's not so self-critical.
All right, yeah, that answers the question. I'm afraid that's all the time that we have for now. So we're really grateful, Denise and John, for helping us understand ourselves better as traders. And we'd love to have you both again in the near future. So thank you so much.
Thank you for having us, really.
Great, thank you very much.
Great to meet you all, so to speak.
All right.
Bye. Thanks.
All right, thank you.
All right.